It is time now for Mike on the Money. Mike Giordano, financial advisor with Williams Wealth Management, is here. Great to have you here on Fed Day.
Absolutely.
Mike, and the Federal Reserve this afternoon decided to hold short-term interest rates steady. So the cost to borrow money overnight remains above 5.25%. Happy to have you here to talk to us about all this. So give us a refresher, Mike. The Fed, we know, does not control all interest rates. So why do these decisions matter to our friends watching at home?
Yeah, that's great, Gabby. Absolutely. Yeah. So the Fed directly controls that overnight borrowing rate. That's typically what banks borrow at. But think about it. If you were going to lend money to somebody and you lend them money overnight, you got a pretty good chance you're going to get repaid. You're not too worried about the market conditions tomorrow. However, if you borrowed you lent money to somebody for a year, 10 years, 30 years, now you got to worry about, are they going to pay me back? And what are the market conditions going to be like over that entire time? All that uncertainty means that you have to raise rates even higher than those short-term rates. So when the Fed raises those short-term rates, it pegs everything else up higher. It's a domino effect. Everything else rises with it.
And we know the market is not expecting rate cuts anytime soon. Is that also the expectation of policymakers?
Yeah, I mean, they didn't necessarily say when they're going to start cutting rates or how many rate cuts they'll do this year, but they basically said they need more confidence. Inflation over the last 3 months has not given them confidence that it's heading back down to 2%. So they need more confidence, and that likely is going to take several months in order for that to fully play out. And so that was the part that was kind of like predicted already. The question was, are they going to rule out a rate hike from here? And the Federal Reserve Chairman Jay Powell basically said that he wouldn't definitively say there's going to be no rate hikes, but they're not really eagerly thinking that right now.
All right. So, happy May 1st.
Yes.
It is springtime. I was just talking to my husband, Andy, who you know well, about some home renovations we're looking ahead to do.
Wow.
We've got a deck project in the future. We know many of our friends at home looking for maybe a loan to buy a new car or a home, or maybe do a major home renovation. So, can you share some advice for them?
Yeah, it's not really an even, either or. The most important thing is if the numbers really work out for you, then of course, it's an easier decision. You can get exactly what you want. If the numbers don't work out, it's putting too much stress on your finances, then you got two choices. The first thing you could do is just diminish what kind of purchase you're going to make. You buy a cheaper home, you buy a cheaper car, you dial back that renovation. Maybe you don't do all of it. You do like part of the deck, right?
Some of the deck.
Yeah, you do half the deck.
Only a couple stairs?
A couple of stairs. There you go. No safety hazards there. Or the other thing you do is you just simply delay the purchase. You try to build up as much cash as possible. Maybe interest rates at that point will be lower, or you simply won't have to borrow as much money. The most important thing, though, is you don't want to borrow money for a consumable, something that you're not going to get the money out of later, like an expensive vacation. If you can't afford that expensive vacation, certainly don't put that on the credit card because you're going to compound your efforts.
All right, good advice there. And Mike, we know interest rates play a big role in the markets as well. And right now they do seem to be overshadowing some of the good news.
Yes.
Okay, can you help us feel good at the end of the segment?
Of course, that's the whole point, is to go through this thing and then feel better at the end. Yeah, interest rates are a factor when it comes to evaluating stock prices, but they're not the only factor. The more important driver of long-term return is what's happening with actual company earnings. And company earnings this quarter have been really, really good, even better than the expectations were coming into the quarter. So that's been really, really good. The problem is that inflation's picked back up a little bit. People are concerned that interest rates are going to stay higher. So it's kind of made the market a little bit uneasy. We were due for a little bit of a sell-off, so that's all good. So at the end of the day, what you have to think about is who knows what's going to happen over the next few months. You could have all kinds of turbulence, but the long-term structure of an innovative American economy is still intact.
All right. And now we feel great. Yes, always.
You're innovative, especially with that deck that you're about to put on.
Oh, well, just you can give Andy some more advice on that.
There you go.
Mike Giordano, financial advisor with Williams Wealth Management. Thanks so much for being here.